Hello again, everyone. This is Andrew Kang, and the title of my slide presentation is Former Fed Chair Ben Bernanke. I'm sorry, I think I've covered up some of the words here. Sorry, former Fed Chair Ben Bernanke speaks with CNBC's Andrew Ross Sorkin, who is the political reporter for CNBC. Little background on Ben Bernanke. He served 2 terms as the chair of the Federal Reserve, which is the Federal Bank of the United States. He oversaw the Federal Reserve's response to the late 2000s financial crisis, which I'll shed a little bit of light on in the next slide. He's also an American economist for Brookings Institution. They are a public agency based in Washington, D.C. They are the think tanks, which consist of economists, sociologists, people who advise Washington on some of the nation's biggest problems. Okay, the coronavirus impact on U.S. economy. There's obviously a lot of stress on the financial system with business closures and people not working and unable to pay bills. We could see as much as 30% unemployment in the next 2 quarters. Before the pandemic, it was at an all-time low of 4%. And the feds are faced with an economic shutdown that may last at least another quarter. Okay, first question is this going to be bigger than the financial crisis of 2007? And how does it compare to the Great Depression of the 1930s? Bernanke answers, the financial crisis was a collapse of the financial system, and it all started with subprime mortgages and a loss of confidence in the system. We saw, as a consequence, credit breakdown, and that's what really damaged the economy. And he points out the main difference right now is that our financial system is so much stronger than it was in 2007. And obviously, this could change if the pandemic lingers. As far as the Great Depression goes, the Great Depression was very different, he points out, because it lasted, first of all, 12 years, and it was caused by human problems. And there was financial and monetary shocks that hit the system. Now, how does the central bank become a commercial bank? Feds have an emergency lending authority. It's called the 13(3) lending authority. And basically, the feds could lend out to anybody. This is what happens when credit markets break down and you see a credit flow that is unavailable. Now, this helps to protect the banks and make credit available. Right now, obviously, the banks are hurting or suffering losses because borrowers cannot pay back the loans they took out from banks because of business closures. The feds cannot make direct loans, so they go through intermediaries who the borrowers work with. Recommendations. This is a public issue, Bernanke points out. So we need to get a handle on the virus first and make sure that the risks have declined significantly before putting people back in the line of fire. That is, putting people back to work, businesses reopening. Our financial system is very strong before this pandemic, as he points out. So he is confident that we'll bounce back. And obviously this could change, as I pointed out, if the pandemic lingers and we continue to see businesses close for a a sustained period of time. And he also points out that we know how to get the economy working again. He's very confident that so the financial and monetary policies will do their thing. Now, key points. This pandemic is more like a natural disaster, not caused by human problems like the bad monetary policy and credit breakdown from subprime mortgages like we saw from respectively the Great Depression of the 1930s and the financial crisis of 2007. The Feds are providing emergency lending to bail out banks and provide credit to businesses through intermediaries during this economic shutdown. Bernanke is, again, confident our financial system, which was very strong prior to this pandemic, will help us recover. And references was the CNBC video that I saw. Again, that was on March 25th, 2007. Former Fed Chairman Ben Bernanke speaks with CNBC's Andrew Ross Sorkin on Squawk today. Okay, and that concludes my slide presentation. I hope it wasn't too brief. I'm looking forward to hearing your comments. Thanks for tuning in.